Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel here with Dennis Dick. Joel out today for the Jewish holiday, but we're joined by special guest who'll be on with us in a couple of minutes here. Steve Big Beat Orr, Benzinga Vice President News aficionado. He will be on the show with us for the day and breaking down these markets with us. We are, I don't know, we're not in a great mood this morning. The markets are being rather dumb, or at least I feel that we are being dumb. We have trade headlines every other day. The market is reacting to them like they've never seen one before. And we'll talk about just that volatility and the back and forth action. Every trade headline means something else, but really do they mean anything at all? So that's on our minds. We've got a Fire Eye with some guidance. J&J getting dinged on a penalty here, $8 billion they're being told they have to pay. We had Levi Strauss earnings after the close yesterday. And our guest, Kenny Polcari, he's a senior market strategist at SlateStone Wealth and a CNBC analyst. He will join us at 8:35. Before I throw to Dennis, I want to remind you folks that the Webull WeTrader competition is live and happening. Starts every Monday from this past Monday through the week of November 9th. 4 weekly competitions. You can win $11,000 worth of Amazon gift cards, a Tesla Model 3, or $40,000 towards your student loans. The best paper trader on Webull. So download the Webull app and join the competition there. Now, Dennis, what's the word here? How you doing this morning?
Doing well. You gonna start my video? It says you cannot start.
Start your video.
Oh, there it goes. Okay, so now you can see me. And it's this random walk market. Do you remember the random walk theory from your behavioral finance courses? The theory that states that you cannot predict future market movements because they're completely random. That's the kind of market we have right now. This market is so random. No deal. Yes deal. No deal. Yes deal. No deal. Yes deal. No deal. Yes deal. We've been doing this for 6 months. For real. We've been doing this for 6 months. And look at what the SPY has done in the last 6 months. I mean, really, when you put it in perspective, we started this no deal, yes deal. I guess we've been doing it longer than that. But really over in April, we were 285, and then we've been down to 270, and then up 300, and then 280, 300, 280. The yo-yo market, random walk market continues. I have no idea what this market's doing day to day either. I would have thought maybe we get a little bit of follow through. But now when you get a headline breaking that says, oh yes, maybe a deal is on the table. So what is the latest headline on the potential deal, which we've heard 10,000 times?
The latest headline from Bloomberg is that China is still open to reaching a partial trade deal with the US this week. That's according to an official with direct knowledge of the talks, as they told Bloomberg. Signaling Beijing is focused on limiting the damage to the world's second largest economy. This is, of course, 2 days after Bloomberg reported that China was not willing to do a deal when they come to D.C. tomorrow and Friday.
The whole thing is just ridiculous. I mean, I'm so sick of this deal, no deal. And it moves the market 300 down points every time. So we're down 300 yesterday because, no, we're not going to get a deal. We're blacklisting companies and it's a mess. Well, let's forget about all that and get all the losses back from yesterday because you know what? Hey, maybe we are going to get a deal. You know what? It will be a headline next week. There's going to be no deal. And then there'll be a headline. There is going to be a deal. So if you're buying the market when it's up 300 points on a potential deal, you're doing it backwards. It seems like the drops are to be bought and the pops are to be faded. And that's the way I'm going to approach today as well. I'm going to take this opportunity to sell stocks. Maybe some stocks I want to get out of my longer term portfolio. Maybe there's some stocks that, I don't, I want to be short. There's going to be some potential pops. And it's not, you can't just pick a stock, any stock, although maybe you can. But, look and have your list ready. These are the kind of days you want to be selling into. And in the other days, like yesterday, those days you want to be buying into. This is the market that we are in. It is a contrarian market. It has been that way for a long time. Really, it's been that way longer than the deals. Like go back 2 years ago. So 2 years ago, go back to January 2018, so not quite. We're at 286. We have gone nowhere for about 20 months here now. Just chop, 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 chop. The chop fest continues. We've got to trade the market that's given to us, and this is the chop market.
And I thought we're past this. It seemed like for a few months there, either there weren't as many trade headlines or the market wasn't reacting to them in this way. I felt like we were past this sort of every headline.
We're past it on Trump's Twitter account.
But I guess
when it comes from Trump's Twitter account, they were starting to, the moves were being a little bit more muted. But this didn't come from Trump's Twitter account. At least I didn't see it in Trump's Twitter account. No. So, this is breaking, or this is coming from, you said Bloomberg. I mean, I don't know. Are we going to get a deal eventually? Probably going to get a deal eventually. Do I think a deal is imminent? Hell no. I've been told this too many times. What's that saying go? Fool me once, shame on you. Fool me twice, shame on me. Fool me 22 times, definitely shame on me. So I'm not listening to any of the gibberish about a deal, no deal. I'm just going to trade the market that's given to me. It's the random walk market, and moves are to be faded until proven innocent. So we get an actual deal, maybe it's different, but I don't think there is a deal imminent.
Yeah, I feel like I'm stuck in a game of no deal.
Deal or no deal? That should be the name of the show today. Deal or no deal.
Too late. I already made the name of the show.
Yeah.
But yeah, that's what it feels like. So
that was a good game show, though. I kind of like that.
It definitely had its moment. So where does this leave us now? I mean, we popped on this headline.
It leaves us getting all of yesterday's losses back. So I'm just going to say again, I think, if you look here overall, the money has really been made fading the moves. I mean, I look at this chart from the last 2 months and look at how many big red candles and big green candles you have. And we're right at the same spot we were 2 months ago. So if you're using this opportunity to fade, the fade trade has just been working. It's been working for 2 years. The Momo plays have not been working. Jumping in and saying, oh, it's breaking out. That hasn't been working for the last year. Breakouts haven't been working. Of course, they work on a few stocks here or there. But overall, it has worked much better. And obviously as traders, I say we always live in the percentages. And it seems like the odds are that, hey, maybe today's up move is going to be followed by another move down tomorrow, or maybe in the next day after that. But it seems like the market always wants to come back to where it was before. So I'm going to keep playing the fade trade because that's what's working. So fading moves.
All right, let's move on to some individual numbers that are not trade war related. And we'll start with Johnson & Johnson here. They're being told they have to pay $8 billion in damages to a man who was previously awarded $680,000 over his claims that it failed to warn him that their antipsychotic drug Risperdal could lead to him growing.
So, okay, first question. How do they come up with an $8 billion figure? How do they get 8 billion? Why not, make it 80 billion? Like why was these random numbers? $8 billion. Well, $8 million would have been a lot. 8 billion. What do you want to make him one of the richest men in the world?
Yeah. See, what is that?
What is going on?
That what? It must be a cash and stock transaction because I don't.
What is going on when you're awarding an individual? An individual is awarded $8 billion. Is that what you're telling me? As an individual awarded $8 billion punitive damage.
I mean, everyone knows he's not going to get
$8 billion. There wasn't 8 million. It was 8 billion.
With the B. That's what I said.
This is complete utter nonsense. I cannot believe. So let's make this guy, and obviously, he should be awarded some. I'm sure he's went through some very difficult times. Should he become one of the richest men in the world because of it? Absolutely not. Well, I mean, $8 million is going to make a big difference in this guy's life, not 8 billion.
Neither here nor there. He won't actually get that full amount. But Johnson & Johnson shares are down on this headline.
Well, of course they are. I mean, and we've seen this before, but they're going to appeal. So here's what's going to happen. They're going to appeal, and it's going to end up being a hell of a lot less than 8 billion. I'll tell you that right now. That's my opinion, and I believe that's going to happen. So I think, the Johnson & Johnson weakness probably to be bought. Technically speaking, you have a lot of support down in that 126.5 area. Does it get down to there? I don't think so. I don't think it's going to fall that far, especially in this tape right now. And it's a stock that it was trying to bottom. So I don't know if it's going to be one of those that just continues to go down here or not. But funny things happen. I'd say 126.5 is a nice support down there, though. So if it gave you a chance down there, maybe it holds. But I think this weakness is probably going to be bought because I think everybody is going to probably say, that he's not getting paid $8 billion.
So you're fading every headline. Good news.
I'm pretty much just fading. I got the fade trade hat on. And you know what? And here I am. And I should have had the fade trade hat on yesterday because I got this one wrong. I said that Domino's Pizza, I'm like, I'm not buying the dip on this.
Oh, man.
And I was like, it could go down to 220 and let's see what it does there. They ripped that thing. So if you were playing the fade trade and buying the dip, you got rewarded there again. So that serves me right for moving away from the fade trade with a call on the show. And I got that one wrong, big time wrong. I didn't trade it, but I said on the show, I thought it could go down to 220 and we see what it does there. No, it didn't even, it ripped. I mean, that candle's ridiculous. So yeah, they miss, and then they just say, oh, we're buying it anyways. And we're going to buy the hell out of it. And we're going to squeeze the hell out of anybody who shorted this on the open. And by, an hour and a half after the open, the thing was in the green. It just kept running and running and running. That's the most ridiculous candle again. I mean, we get some ridiculous moves here right now. And I'm going to say this is just this random walk, even if you have like the earnings, let's just say hypothetically you were an insider and you were like, oh, they're going to miss. And you short the stock, on illegal information. You got it handed to you. I mean, here it was down, unless you covered at the open. But I mean, this thing just ripped on these. So you can have inside information all you want. They don't even know how to use it right now. Those moves are random. You see stocks beat lots of times and they get whacked on it. And this stock misses and they buy the hell out of it. I mean, how do you figure it out? It's tough market.
I don't know. And the reason we only look at the headlines, the earnings headlines on this show and not dive, because we know the algos also are not diving deep into the reports either. So it's whatever. They
just get her going in one direction, right, and let's move it and pump it and do whatever we can. I mean, I don't know how much is algo driven. I don't know how much is momentum driven. I don't know how much. There's a lot of it's algo driven. I mean, 90% of your trading out there is algorithmic, and it's not all just high frequency trading. There's institutional algorithm. I mean, there's traders using algorithms. I mean, I use algorithms sometimes. I mean, a lot of it is algorithms. So, figuring out what the algos are doing, or if they start getting her going in one direction, it can go. And I mean, was that all algorithmic driven? I don't know, but I can tell you they squeezed the hell out of whoever was fading that headline. And I thought it could go down to 220. I thought, well, it's come this far. Why not go to 220? No, we're going to rip this thing 30 points. Crazy moves, man. Crazy.
I didn't see any catalyst. The move happened, the real whoosh upward happened at like 10 o'clock, 10:15. And it went straight up there, but there's no fundamental reason for that. So based on
there's no fundamental reason for any of this. Is there a fundamental reason for us to be up 300 points today when we're down 300 yesterday? No deal yesterday, but deal today. It's all just nonsense. It's all utter nonsense. I'm sorry. You can tell I'm wound up here today, but come on, like these moves.
Okay,
just borderline ridiculous.
So based on headlines, Levi
not even borderline.
So Levi Strauss should be up today. They beat on the EPS 31 cents versus 28 cents. They beat on the sales by a hair at $1.44 billion, and they reaffirmed their annual guidance. Let's look at the chart of Levi and see what it's done. Oh, and it's down.
Well, let's look at the after hours chart of it last night and bring that up too, because this thing was all over the place after it reported last night as well. So Spencer's bringing that chart up for us there right now. Show us that after hours.
All right, actually it's up now, I guess, but it was down when I looked last night.
Yeah, well, and it was up for a bit. So I mean, off the initial spike, and I'm trying to grab the levels there too. I don't have it in front of me. Joel's better with that.
So the after hours low was 1857, and the high was 1989.
Yeah, so you have a tidy little 10% range here after hours, and it's here 0.1%. But again, showing you got to take advantage of these after hours moves. I mean, 1987, you had two highs right up there. Hindsight Capital's 2020, obviously, but it's interesting that it goes right up to the previous day's high, fails there, and then comes down and gets actually near the low last night too. And now it's just settled doing nothing. So, everybody who's got options on the thing, they're all probably, basically worthless or whatever. I mean, from the move before, if you're paying or buying the straddle, you're not getting paid. But again, if you're buying these options and buying calls, use that after hours action, sell some stock against those calls, because you know what? That's a good way to play it sometimes. But It's tough. The earnings are tough here right now. I'm just going to keep saying that. It's been a tough market to predict what the next move is going to be, even on earnings plays. So if we're looking at Levi here now, I don't know. I mean, it's in the middle. It's $19 in the middle of nowhere. You definitely have resistance up near 20. Big whole psychological number. Plus, obviously, I have this couple highs there. I don't have my open book open. I wonder, JV Spec, if there's anybody perched at 20. So I know JV Spec's in the chat, so maybe you can quickly check that, because I don't have my open book open yet to look, but it is a New York stock. So see if there's anything at 20 from an order flow perspective. But I don't know. If I'm looking at this overall, this story, so these 50% work. Look at the move from July and look at the move down through August.
Yeah, I was just looking at that.
23.74 was the high, $16 was the low. We'll just do a round and you say it's $8 fall. A $4 pump would bring you right back to 20, right where you're failing. So the 50% retracement here is looking like it wants to fail here. And a lot of times you see the big down move, then a little bit of lift, people get hope, and then they dash the hopes and comes back down. So without the earnings and not considering any of that, if I was just trading from a technical basis, I'd say I'd be a seller up here in the 19 handle, because I think this thing is lower. I also think that Levi Strauss isn't changing the world. They make jeans. That's been around for 100 years. This isn't some huge growth like, yes, it has a nice dividend, 3.14%. Yes, they make some money, but at the same time, I don't think this is going to be the storied stock that takes off to $30. So sold to you, in my opinion, Levi Strauss.
The day of their IPO, they were on CNBC, and I don't listen, but it's on the TV here, so I can just see what's on the screen there. And the graphic was something about technology, like, leveraging technology to make jeans, and I was like, give me a break.
It's a technology company. Levi Strauss, just like Domino's Pizza, it's a technology company.
It's a tech play. Give me.
These are ridiculous, some of these comparisons, because it's people trying to justify ridiculous moves and ridiculous valuations.
Yeah.
So they'll find a way. When Tesla was trading up at 380, well, it's not a car company. It's now, a play on everything else. It's just, what the media does to justify moves. Levi Strauss, a jeans company. It's not a tech company.
The companies do it. I mean, they say tech company.
Well, they hear somebody else. They're like, oh, yeah, we'll take that headline. Sounds pretty good.
Yeah.
We'll be a tech company.
Yeah. All right. Okay. Let's move on to some guidance here. We got some guidance from FireEye. Yesterday, they see their Q3 sales guidance at or above the high end of the prior range of $217 to $221 million. So at or above 221, I guess, is what they're saying for their Q3 sales guidance.
I mean, that's good news. The bad news is it's stalling out right around a significant level of 1450. Also, the bad news is this stock has been in a downtrend for a long time. Yes, we squeeze people, and I'm assuming the short interest is quite high on this. I didn't go bring it up, but somebody wants to grab in the chat while I'm doing my talk. I would imagine it's probably somewhat high.
I'll find it.
You can go find it in the background. But we're in a downtrend. I have made more money selling stocks that spike that are in downtrends. So I'm going to stick with that theme and say I'll be a seller. I know JP Morgan came out with a note today, and they said this move could continue higher here. They liked it. I'm on the other side here. I think the stock's in a downtrend, been in a downtrend for a long time. It's been a dog for a long time. Think about how good CyberArk, was before, they started hitting all the mobile stuff there a couple months ago. But, think about the moves, even Palo Alto Networks. And then you look at FireEye. This is the laggard of the group. This is a stock in the last, 5 years, FireEye has went down. In the last 5 years, Palo Alto Networks, and we're just looking at other cyber stocks, has went from 50 to 200. CyberArk, CYBR, has went from 40, and it got up to over 140 before pulling back recently. So, I mean, you're buying the dog of the group. The dog of the group does it bark every once in a while? Sure, it's barking here this morning, but I think it's still a dog, and I think Pop's to be sold, and I think when we look at this 6 months from now, I think it's lower.
Short interest of about 10%.
So we were squeezing them a little bit here this morning. Let's see what it does at 1450. Can it hold on? Can it get up? That's a big number for it. Yesterday, it spiked up there, and I don't know what that spike was all about, but was it yesterday? Yeah. Oh, it opened up there, it looks like. Anyways, the high yesterday, 1448, so that's a significant number for it. Let's see what it does there. All right, we're going to be up over there. Maybe it gets interesting, but if it opens like near 14.5 and starts to fade right away, I wouldn't want to be in it.
All right, we're going to be joined by Big Beat here in a second.
Big Beat!
Before he hops in, let's get to some ratings here, Dennis. We have a number of interesting ratings.
Big one
None
this
more
morning.
so than Macquarie
Mm-hmm.
coming in this morning, dropping an outperform on us on Roku.
It wanted an upgrade. So Roku has wanted an upgrade for a while here. It's been sitting here, nice little cup and handle, wanting a reason to go higher. So we get the reason this morning. I wish it was like Goldman, or I wish it was like Morgan, or I wish it was like, even somebody bigger than Macquarie. So yes, it's getting a good lift. I wish it was a bigger gun. That's all. Nothing against you, Macquarie. We love you, and we know you can move stocks as well, which you're moving here this morning too. But if this was coming from like a Goldman or a Morgan or a Merrill, it would be. I think there'd be a better chance for follow through here. So I would say I do like it. I've liked it here for a while. I even said that, when it was down at 101, I said I was liking it. I thought the bottom, the low for the move could be in, which it does appear like it is, because it's $10 off that, or $14 off that now, at 98. I'm not sure I'm coming in and buying it at 112 here this morning. I want to see what it does. It needs to hold though. Got an upgrade. It could definitely, there's room to 120. It could run, but I also think it could give it back too. So I think it's kind of a coin flip here. If it was Goldman upgrading it this morning, I'd say buy it. I think it's going to keep moving. It's not Goldman. So I'd say guilty until proven innocent. I'd love to come in here and buy it this morning. I can't bring myself to do it.
All right. I apologize if you hear random noise in the background. My internet is being really.
Hopefully
really,
you can hear me too still.
Yeah, my internet is being very strange this morning. So my trade.
What is going on? You got all kinds of notifications happening
it's
too.
my trade station going off and on, off and on, off and on. So
Interesting.
yeah, I hope my internet's working well enough for you to hear us. But I really wasn't listening to a word you were just saying just there, because I was
Maybe
trying.
aliens. Hopefully everybody else heard me. So I was just saying I'm skeptical of the Roku move here this morning, just because the analysts upgrading it. It's not like gold. It's not the firm that's upgrading it isn't a heavy, isn't a gun. They're still influential, obviously, but I said I wish it was coming from Goldman. So anyways, I'm not buying it here up by 112. I might be interested in pullbacks here, but what scares me a little bit too is Shopify's move yesterday. Shopify gave back. Roku held on nicely, but these two stocks have kind of Shopify needs to bounce back in a hurry here this morning too, because that was an ugly candle for Shopify yesterday.
All right, Big Beat just said we're gonna have to reschedule, unfortunately. So we'll get Big Beat on another day.
Big Beat's busy. He's too busy. He can't even say hi. We're all pumped. Big Beat, say hi at least.
All right, here.
Yell at him.
All right, Big Beat.
Big Beat, you got to say hi, because we're all pumped to see Big Beat.
Can you say hi?
And we tweeted it out that you were going to be on.
Did we tweet it out? Did you?
He tweeted it out. He was all pumped. I retweeted it.
Okay.
Made me look like a liar, Big Beat. Get on here. All right. We'll see if we can get him on for a minute or two later on. So, a couple other stocks. We went Johnson Johnson. You can stick with the ratings for a second if you want, because there were a few other ones here too.
Yeah. So
Domino's Pizza getting downgraded here today by Argus. I don't know what that means, because I'm not making any more calls on Domino's Pizza after my call yesterday. FedEx getting another downgrade. It looks like it wants to go to 0. I have this in the long-term portfolio. Man, my long-term portfolio is getting slammed here again. FedEx is trading up here, but holy cow. What is this, trading with a PE of 8? I guess it's going to keep going lower. P's don't matter.
All right, Big Beat, hi before you have to go.
Big Beat is here.
Good morning, guys. How are you this morning?
We got to see Big Beat. What's up, buddy?
Oh, man, it's a quiet Jewish holiday today. So the market seems to be ticking up. It seems like every second we turn around, another algo is pushing a tweet coming out from Trump, or obviously China trade deals every day. It's something different, huh?
How do you trade this market when it is so random? Like, how do you call the next move? How do you predict? As traders, we need to obviously make some predictions. Right. And make calls. How do you make calls in this market when every move is just driven by the next headline?
28 years ago, I bought a crystal ball at a Renaissance fair, and I keep that thing on my desk.
And does it work still?
Hell no. What's interesting is it seems that whenever something bad news comes out, we call it the PPT, the Plunge Protection Team. Always seems to come out. There's always something good being, China's going to be okay, and we're going to have a trade deal next week, and then we don't have a trade deal. Oh, but don't worry about it. They're coming to meet us. Oh, but they're cutting it short. It just seems that everything is contradictory right now. But, I think, Trump said it in the art of the deal. I think he said, make it the worst thing and then try to get to be the best thing out of it. So it's going to take some time. I do think China will have a trade deal, but, we can't live on every single headline.
Well, the market seems to want to live on every single headline there. So
They
what
love
stocks
Trump.
are on your radar? Let's move into individual stocks. And Big B, we know you watch a lot of stocks there.
I do.
What stocks are you watching here lately? And are you licking your chops on anything as we've had a recent pullback? What are you
Well,
looking at?
what's interesting is I've been very tight, my eyes on the retail sales. They have not been good lately. And I have been watching gaming stocks. There's a new thesis that I've got coming out that both Sony and Microsoft, SNE and MSFT, both said that they will have new gaming consoles. They're not going to have them until next holiday season of 2020. And so I think that a lot of these companies that are making games for these boxes will probably be kind of put back a little bit. I'm talking about Activision Blizzard, ATVI, and EA Sports. So, if you've got all these games being held back and this holiday season retail sales are down, I'm not looking at them. I'm looking for the pullback in either one of those stocks and maybe looking to go long, maybe a little longer term, maybe into next summer or next winter.
What about Take-Two? Because this one's on my radar. It was one that was
Take-Two,
down.
Definitely.
It was under $100. I wanted to buy it. I bought Activision Blizzard. I was like, I want to buy that Take-Two too, because it kind of has been best of breed for a long time. I did not buy that one, and that's the one that really went. So I'm kicking myself. Now you've pulled back here, and you know how I like my 50%. I've been talking about that. We've had a move recently on Take-Two from, let's say, and to say, depends where you grab the move, I guess, from. But I was going to grab it just from the nice round $100 back where we were in May, and we ran up to 135. So if I take that at 17 points and knock it down, I start to get, interested in this area where it actually got to a low of yesterday at 117. So, I mean, it's not going to be, it's going to trade up here today with the overall market here, but I like Take-Two on a pullback. You like that one too?
Absolutely. I also like any one that's going to have mobile apps like Zynga, ZNGA, any of those kind of stocks that are looking forward and not backwards, using the same kind of games like Mario Brothers. We're kind of tired of that, right? We're looking for other things that are coming out. I do think that they're going to refresh, EA will refresh the Star Wars brand. So that's going to be pretty cool. But for the most part, I'm looking for those companies, like you said, pull back a little bit and are looking for next winter.
Jump over.
All right. No, go ahead, Dennis.
Go to a few other sectors here for us. So you like the gaming stocks here. What other sectors are you looking at?
So I think I've said it quite well. Anytime we go into an election cycle, it's infrastructure stocks. I think you're going to see a lot of companies start to move because I think we need to build some roads. And anytime that the election comes up, you're going to see road building. And so I think those kind of companies like Martin Marietta, MLM, will look pretty good coming into maybe next summer. Anything that has asphalt in that company's name pretty much will be a winner in my books, I think.
What a move this MLM has had. I mean, this one one of the
better stock,
better performers of the year for sure for a big company. Started the year around $165 and 265. So we're talking about stocks put 100 points on. There's still room to the upside, you think, on this one?
I do. I talked about this before, about 6 months ago at Benzinga, and I said, look, these stocks are going to do quite well, the infrastructure stocks, and they've done well. While I don't think steel stocks are going to do very well, it's going to be those companies that make roads. So anything that's in the road business, I think you can look pretty good. I also think that the railroads are going to do quite well here. I think there's a big change here coming. I think that movement via trucks will start to slow down a wee bit. But definitely looking into the whole sector of railroads.
Any rail in particular you're eyeing?
I think anything that's probably more domestic for the United States, you can always look into those companies.
Because there's been a few that have been hit pretty hard. I mean, CSX has not been a great performer here as of late. So this is a stock. Well, it hasn't been a bad performer either. It's kind of gone
hit by a few things. One of them has been their own people. The money issue at CSX in Jacksonville, Florida, is where they're allocated. They've had some issues with personnel, so I think those have been sorted out. unions actually, and I think you probably just look to buy it down here somewhere. Probably going forward, probably 3 to 6 month time frame.
All right, Big Beat, I know you gotta do some squawking, so
Yes.
I want to let you run. If you go do that, you feel free to hang out with us in the background, but I don't want to hold you off from that. So
I appreciate that.
There's people on the pro who depend on your squawking.
Need the squawk.
Well, thank you guys, and I'll tell you, it's been an actual pleasure. I love pre-market prep, and everybody should be watching you guys.
All right, thanks a lot, Big Beat.
Bye, guys.
Thanks, Big Beat.
All right. Let's throw him on mute there. We'll keep him on in the background.
Yeah, if he's got something to say or breaking news, Big B can always break in with news on our show there too. We've got Kenny Polcari coming on in 3 minutes. I'll give you a quick imbalance look here. Every day it's like Groundhog Day around here. Even on an up day, GE has a sell imbalance. We got 132,000 shares to sell in General Electric. We have 65,000 shares to buy in AT&T. Why this is interesting to me is that AT&T is ex-dividend today, and a lot of times you see AT&T show weakness. We did not see the traditional run-up. I guess we kind of did. It was a couple days, and maybe it was a difficult tape for AT&T to be running up into, aside from today. So 38's been resistance. So I normally fade on this day. I mean, normally I like to be a seller of AT&T on this day. I don't know yet if I'm playing it that way or not. I haven't decided, but at least this morning here, AT&T is showing a big buy imbalance, and it's giving you an opportunity to potentially sell the pop here as the stock is trading up significantly. Wow, the just closed 36.97, so it's trading up 30 cents in the pre-market from the adjusted close.
So the streaming wars, I guess they start the end of this month and early next month.
When's Disney's product come out?
The 12th. November.
It's coming. It's coming.
November 12th. November.
It's coming.
I don't quote me on that. I think it's early November.
They're on a live radio show.
Right.
They quote us all the time off stuff we say on this.
Well, I was right.
I see Joel Elconin writing these pre-market prep summaries, and I get quoted all the time. So I got to watch what you say because he puts her in print.
Yeah, November 12th for Disney Plus, November 1st for Apple TV Plus. So streaming wars are heating up here as we head towards November. Let's do one more rating that I wanted to get to, and that is which one? It was a downgrade to iRobot from Raymond James to underperforming.
I got to stop putting these cheap stocks in my long-term portfolio because cheap stocks get cheaper. And all the stocks that I've bought on dips that I thought, well, I wanted iRobot and I kind of like the long-term, you know, it's a reasonable valuation. You know what? They just get cheaper. So I don't know what the headline is that's driving it down here today. Obviously, there was a downgrade if there was something else, but Raymond James downgrading it to underperform, which is equivalent to sell. So I bought this in my long-term portfolio recently at $61. Obviously, a mistake here once again. So my long-term portfolio, I've been making some mistakes in that. And like I've said this on the show, and you know, I try to analyze myself, and I feel like I'm a very good day trader. I mean, I've made all of my net worth and all of my living from day trading. So I feel like I'm a very good day trader, profitable every year of my 20 years in day trading. At swing trading, I don't do that much. I feel like I'm okay at it. I make some good swing calls. When I do it, I do. But my bread and butter has been day trading. But my long-term investing, I guess, you know, when you own like 90 stocks, you're just kind of going with the overall market. And I kind of get disappointed. But when you look at the overall market here for the S&Ps, and we've gone nowhere for 2 years, I guess it's hard for me to expect my long-term portfolio to go up in the last 2 years as well, because I'm just basically, when I got 100 stocks, I'm basically in the market. So, you know, yes, I have some in selective perception. I always like to complain about the stock in my portfolio that's going down. But yeah, obviously I have some good ones in there as well. So I don't know, but it seems like lately, maybe it's selective on perception on my part, but the iRobots and the FedExes and the Virtue Financials really got me bummed about my long-term portfolio.
All right, it is 8:35. Let's bring on today's guest, Kenny Polcari, great friend of the program. He's a CNBC contributor, and he's in a new firm that I don't know if is publicly available information. If I'm allowed to say it, I kind of said it on the top of the show. But Kenny, good morning.
He's on mute. There he is.
No, he's here. Kenny, are you with us? Here. Oh, we hear. Very, very faint though. Very, very faint. See if you can get closer to your mic. We're working through it. Working through it.
Might have to take a break and fix Kenny. Should we take a break?
No, not really. You know what, Kenny? All right. Dennis has a point. Let's take a break. and I will grab Kenny Polcari. We'll be right back with Kenny.
Is this your internet connection, maybe, Spencer?
I don't know why you can't hear me. Wait, hold on.
All right, welcome back, everyone. Pre-market prep. Spencer Israel, Dennis Dick, joined now by Kenny Polcari, CNBC analyst and a senior market strategist at SlateStone Wealth. Kenny, good morning. How have these past few markets been treating you?
Well, you know what? It's been a very interesting time, right? We've had kind of a month of market readjusting, certainly moving lower on all the concerns that we've talked about, whether they're trade concerns, whether they're recession concerns, whether they're global political concerns, whatever they are. The market has had kind of an interesting time, but I think it's actually an opportunity, right? I don't see a recession on the horizon. I don't see this panic, that the recession's knocking on our door and everyone's got to go real defensive. I actually think these moves lower certainly have provided an opportunity and will continue to provide an opportunity. And look what happens today. This morning you get some news out of China that maybe they're considering a partial deal or some kind of a deal, even in the face of, Trump's moves on Monday afternoon, and even in the face of potential tariffs that are go up or due to go up on the 15th of this month and then again in December. I think the market's fairly resilient. And I think moves like this provide an opportunity for names that you've done your homework on, that are solid names that are getting unnecessarily beaten up. I think opportunities like this create exactly that silver lining for the long-term investor. Now, for the day trader, for the guy that's, whipping it around on a daily basis, certainly all the noise created by whether it's geopolitics or whether it's by talk of recession fear or weaker macro data certainly provides an opportunity for the day trader types to jump in some of these more active names and to whip around. I think it certainly solves both problems, but from a long-term investment perspective, I would not be running out the door at all. I'd be using weakness to add to names that you like, that are solid, that you've done your homework on, and that will prove to be winners in the long term.
Yeah, but this is silly though, right? I mean, these overnight moves this is silly.
They're ridiculous. And what happens is, and what you find, and, we've had this conversation. Listen, the market is what it is. It is tech market. It is driven by algorithms. It's driven by smart logic algorithms that read headlines and react to words without really being able to interpret. From a human perspective, you and I can have a conversation, and I might word that may sound negative, but yet you and I understand kind of there's another implicit meaning to it. Yet an algorithm can't identify that yet. All they recognize is that the word is negative or it's positive, and then they create flow based what it perceives to be a headline that is either negative or positive. Right? So you got these moves that whip it around, and they whip it around fast. You've seen how quickly the market can react. I mean, look, this morning, when I got up at 5:30, futures were up slightly, and then that news came out about China willing or potentially willing to accept, and boom, they shot right up 150 points, right? And so you don't really know whether that's going to be. I mean, is the headline realistic? Is the headline written in such a way that it's trying to create that move? We don't really know. I mean, we've been down this road before. And so, yeah, it is a little bit ridiculous, but it does create opportunities, certainly for the day trader types that, love volatility that creates. from a long-term perspective, I think long-term investors are frustrated with it, and rightly so, they should be. But I also think they're getting to the point now where they're starting to ignore that noise. They're starting to ignore the ridiculousness of the moves based on a Twitter headline or a news headline or some comment that somebody makes. I think the long-term investor is learning how to put that aside and just focus on the long-term plan.
Oh, I would hope so. But for those of us watching the day-to-day moves, intraday moves, sort of bound by these moves for now. So you said that you're still feeling good here long term. What sectors are you feeling the best about right now?
Listen, I tend to, in light of kind of all the conversation around whether it's the election, whether it's Elizabeth Warren, what's the market, or whether it's, trade talk, whatever, I tend to favor, at this moment, more value names. Maybe you might even call them deep value. I love energy. Energy is getting crushed. I hear you. But I think there's a lot of value in energy. And if you've got time, if you're a long-term investor, if you've got some time, I think energy is going to make a nice move. I like financials because you're going to have to see financials continue to show strength if we're going to move forward. And look, there is also technology is also going to play a role in portfolio. And there are value names in the technology space, and I think you have to kind of search them out, and you have to do your homework. And look, even tech names that are real stalwarts, names like Microsoft, which I think are great names. Yeah, Microsoft is trading closer to its highs than not, so you wouldn't necessarily consider it value. Yet within the tech space, I think Microsoft is a valuable name. And so I would tend to play it that way, right? I don't tend to be the day trader type that runs in and out just because it's not what my job allows me to do, but it's also not what my job is. So I tend to be much more focused on the long term.
And we're earnings season here. We're about a week or so out from the start of the Q3 earnings season, and they're projected to decline again for like the third quarter in a row, decline on a year-over-year basis. What are your expectations here for what we're going to see?
So, the expectation right now is for a decline in earnings, right? But we saw that even last quarter, they in the end, what it proved to be. And I think there is some resilience. I think what's going to happen, and we're going to start to know about it very early on in the earnings season, you're going to start to listen to what these CEOs and CFOs say about forget the quarter that just ended, because that's over. That's really historical, right? They can talk about the quarter, but really what you want to pay attention to is what they're thinking about going forward, as you always would around earnings season. You're always interested in the forward guidance. And what's going to be interesting is the way that they talk about how trade is, in their view, impacting. Look, you've seen a lot of CEOs on TV lately, whether it's CNBC or whatever you're watching, and they're all talking about how they feel the consumer is in a good place, right? The consumer is strong. That this fourth quarter and that the holiday shopping season, everyone's expecting blowout holiday shopping season numbers. That speaks directly to the U.S. consumer and how the U.S. consumer feels about their finances, feels about their job, feels about the future, right? If they're willing to go out and have a blowout quarter in this holiday season, people are feeling good. And I think that's reflective of a stronger economy. I don't think the economy is going anywhere negative or you're going to have a major correction anytime in the near future, partly because I think the economy is strong, but partly also because the Fed, and yes, once again, they came out, talking about how they will support, the ECB is supporting. You don't have the central banks running away. And so I think there's a natural floor under the market as a result. And so I actually feel good. I don't think the quarter is going to be nearly as negative as they suggest it's going to be. We still might end up flat or slightly negative for the quarter, but it's going to be better than what the current expectation is. And I think that's going to set us up for a rally into the end of the year. A rally that's going to take us probably to where we are in terms of the highs that we've already seen. So I'm suspecting somewhere between 3,000 and 3,050 is where we're going to end the year, maybe around 3,000 and a quarter, right? 3,025 is kind of where I suspect the year is going to end. But I think it's going to set itself up for a very interesting 2020.
So you mentioned the central banks there. You're expecting the Fed to keep on its lower rate hike policy?
Listen, I'm in the camp that I don't want to see the Fed lower rates anymore. I think it's pushing on a string. Yet the market is almost demanding that they do. The administration is demanding that he does. And the truth is, my sense is I think they feel backed into a corner that if they don't continue doing that, then the market is in fact going to go into this meltdown mode. You're going to see the algos go into a frenzy, and then you're going to have to listen to everybody blaming the Fed for being out of touch. Quite honestly, I think rates are historically low in this country, right? We're once again back to rates that are going to be sub 2% in another week. Which are historically low. Do I think rates are going negative in this country? I don't think they are. I think there's too many people that are chasing, rates, foreign money that's coming in because we're still actually paying positive rates. But one way or the other, I think the Fed is going to continue, and he said it yesterday, they're going to continue to be supportive of the economy, AKA the market. By lowering rates. I think at some point it's going to get to the point where it doesn't make any difference. I mean, look, if you're a CEO or if you're even someone, a citizen in this country, if you didn't want to borrow money at 2% and it goes to 1%, is that really going to cause you to run right out and borrow money at 1 3/4? I don't think it is. Listen, if it were 5% and we went from 5% to 4%, there's absolutely a difference there. But to go from 2% to 1 3/4% on the Fed fund rate, is that really going to cause anyone to run right out and borrow money? It may cause some big companies to go out and finance 30-year debt and then buy more stock back, right? Because that's what they did. They didn't necessarily go out and create a ton of new jobs. They used all that money to buy stock back, which is part of, kind of the pitching that's going on right now on the Democratic side in terms of the presidential election, and they're all trying to rein that in.
So what would have to happen, Kenny, for you to change your mind here?
I don't think I'm going to change my mind here because I don't think the Fed should be cutting rates unless we go completely off the edge like we did in 2007, and that is absolutely not happening. But I think at some point, the longer we drag this out, the longer you keep doing this, the worse it's going to be trying to get out of it. And I think at some point you got to put your foot down. You got to look. We've given so much Kool-Aid to this market. Rates have been so low for so long. Do you realize it's been a decade of rates where they are at sub 2%, really, for other than the last year when we went just over 2%. There's been a decade of rates at sub 2%. And look where we are. It's been negative rates across Japan for 30 years. It's been negative rates in Europe now since the great financial crisis, and those countries are no further along. So I don't see how negative rates helps anybody. I think there's got to be a return to normalization. And if that means the market's going to correct because they're all going to stamp their feet because they're not getting what they want, well, then so be it. But the market needs to correct and come back to reality. And reality is not negative rates, and reality is not sub 2% rates for any length of time. And so in my opinion, I'm in the camp that the Fed should do absolutely nothing. If they want to stay where they are, they should. But cutting rates, in my mind, does nothing for the health of the economy. I mean, if the economy is going to grow, it's going to grow at 2% rates. Right? What difference if it goes from 2% or 1.5%? Is that really going to make a difference in the economy? No, in my opinion. But so I don't think I'm going to change my mind at all on that. I think the Fed should stand pat.
I'd be remiss if I didn't ask you before you went for a recipe here. So what's on the menu for at the Polcari household right now?
Well, listen, we're getting into the holiday season, right? Thanksgiving is coming up, so I'm starting with kind of holiday recipes, right? So Thanksgiving recipes. And today in my note, I gave you the stuffed baby pumpkins. It's really in the presentation that you use the pumpkin, but you're going to make a butternut squash risotto and then put it into the stuffed baby pumpkin as you serve it on your Thanksgiving table. Everybody gets an individual pumpkin with the risotto stuffed right in there. It's really delicious, and it makes a great presentation.
Sounds incredible. Kenny Polcari, chef. He's our resident chef. He's a CNBC analyst. He's also the senior market strategist at SlateStone Wealth. Kenny, thanks as always for the time, and talk to you later in the year.
You're very welcome. Bye-bye.
8:50 here, Dennis. While I was talking with Kenny, what were you seeing out there? Anything of note?
Futures starting to leak here a little bit. We're not seeing it's very mixed here, the market. And what I mean by that is from an imbalance standpoint, I am seeing a few sectors that look like they could potentially open weaker, which isn't surprising. TLT trading down slightly here, so you're going to see some weakness potentially, or at least not the gains in your REITs and your utilities. They obviously a lot of times move opposite to the overall market. I am seeing strength in the oil stocks. We didn't talk oil here this morning, but it's trading up here once again. So a little lift here in the Chevrons and the Exxons and the ConocoPhillips. They're showing a little bit of strength here too. But really, the story here today is again, it's the fade trade, and we've come off 5 handles since we were talking about the fade trade here. I just think this market is I just can't chase moves here. I've been punished too many times chasing moves, including yesterday, because we had a significant sell-off. I was like, oh, maybe we're gonna get a little follow through, and it's in your face. It's like the fade trade is the way this has been working here. And what I mean by that, when you're up 300-400 Dow points, it's been an opportunity to sell. When you're down 300-400 Dow points, it's been an opportunity to buy. I think the market is going to continue to trade it that way, because these headlines, the China deal, no deals have been going on for too long, and who knows when we're getting a deal? Really, nobody knows. I mean, you can speculate all you want. They speculate, and the algos speculate because they see a headline from Bloomberg and they rip it up 150 points, like Kenny was saying here. But it's all just ridiculous moves, and I can't chase moves here. If you're chasing in this market, you've been wrong a lot of times.
I always assumed we would get a deal before the election really heated up, or I guess after the primary season. But at this point, who can really say? You would have to assume if the market were to really take a bath, then we would definitely get a great deal. But so
well, I mean, that's what it is too. The market's held up. We saw what happened when the market really starts to get hit, and the Trump Twitter account lights up and say, hey, we're going to get a potential deal. There's definitely more pressure on Trump to get a deal done when the market starts to show significant weakness.
Yep.
Have we shown significant weakness here? I mean, we're 3-4% off the all-time highs. It's not significant weakness. So, if we were to fall and lose 7, 8, 10% here, I think there's definitely a lot more pressure for Trump to do a deal.
Yep. All right, back to ratings here. We talked about the Roku upgrade, the iRobot downgrade. Chipotle upgraded to neutral or hold this morning at Gordon Haskett. American Outdoor Brands, AOBC, upgraded to buy at Craig Hallam. What else did I see from ratings? FedEx, you mentioned, I think, Dennis, they're down at Bernstein.
Yeah, another downgrade.
Downgrade to Marshall from Bernstein. And that's pretty much it from the ratings land. There's not a whole lot.
Let's go over, let's look at Chipotle, CMG. The stock's been in a trading range here. Again, the range is it seems like 800 is the buying point. Yesterday we kissed it, $800.15. Today we get an upgrade, and now looking like it's 811.50. It's bid 811 here in the pre-market, so it does look like it's going to open up a little bit, which is not surprising with the upgrade. I'm actually surprised that it's not up a little bit more on that, but it's a stock that maybe doesn't have as high a beta. Well, it kind of does though, so I'm actually surprised not up more with an upgrade, but it's been in range 800 to 850. I mean, I guess you keep playing that range until it doesn't work anymore.
It's part of that trio, that Chipotle, Shake Shack, Wingstop trio. They're really expensive.
And Wingstop had a rating here too today. WING getting a buy rating, not an upgrade, just an initiation from, who was it? Baird? I'm going for my memory.
It was
Loop.
It was Loop Capital.
Loop Capital. Yeah, Loop Capital giving a buy rating to Wingstop. Yep. No trades on it yet today. I would expect it probably opens up because of that. We can't give you an imbalance because NASDAQ doesn't publish their imbalances on individual stocks, and this is NASDAQ listed. They don't publish those until 9/28, so their show's long gone by then when they actually show a projected opening price. It's funny how the exchanges do things all differently. We see projected opening prices for New York stock as early as 8 o'clock. And those change continuously. Where NASDAQ is 9/28, and what NASDAQ does is it actually locks out the majority of traders from trading or participating in that opening print after 9/28. So those opening projections for NASDAQ stocks are a lot more solid than the ones for New York, which lets you keep putting orders in. Like if you see a stock projected to open down 5 points with, that doesn't have any news at 9/28, traders will come in and put buy orders in there because they're trying to buy the stock on the cheap. So it's basically an advertisement out. But NASDAQ locks out most of those traders. There is some floor traders that can get in there. But for the most part, your average Joe cannot participate after 9/28 in that opening print. So what it means is those NASDAQ projections, when they come out at 9/28, are a lot more solid.
All right, we got about 5 minutes left in our show. Let's take a couple tickers from the chat here.
Yeah, ticker time.
Yeah, I'm seeing someone mentioning PayPal. Let's look at PayPal. I'm actually
What's down here this morning? They had some, I don't know if it's guidance, but they had a charge announced there last night. Do you see the headline I'm talking about there, Spencer?
Well, I would if my internet was working.
Well, okay. Well, I can go grab it from you because my internet is working. So I'm going
Okay.
to the Pro. I'll grab the PayPal headline from last night, and they expect this is at 4:30. They expect to report a pre-tax loss of 228 million on company's strategic investments in the quarter, and they see a 15-cent impact on the EPS for the quarter. So they basically said their EPS can be 15-cent lighter because of this charge, and that's why the stock is trading a little bit weaker here this morning. It was down the lower 98, so obviously the market is helping it here a little bit this morning, but that's why PL is weak. We're just looking at charts. Stock has not performed well as of late. It's been leaking here. I mean, maybe it's like, the strong have, the leaders became laggards, the laggards became leaders. Maybe that's still going on a bit. But PayPal looks like, the better times are behind it, at least short term. I mean, you can argue about the 50% retracement. So if we took the move from, let's just say 2019, started the year around $80, moved to 120. So, that's a 630-point move. A pullback here, it gives you in the 95 area. That's where that 50% retracement would be. So, that's where it could go. I'm not saying it's going to go there today. Obviously, it's a little bit weaker here today, but I have trouble buying the stock because the trend is just, that purple crayon Jeff Mackey trend is recent one in the last 3 months is down. So I have trouble coming in here and buying it.
Yeah, but this is one of those ones, from a trade, sure, but it's also one of those stocks that, if you believe in the story, throw it in your portfolio.
You're getting a pullback here. If you believe in the story, sure. I believe in some of these stories here and some of these other stocks is not working as well. So, I mean, sometimes you take heat on these. And I will say some of my best long-term investments I've taken heat on off the hop, and they've turned out to be okay. So, long-term investing it's a tricky animal sometimes.
Yeah. Let's take a look at PH here from the YouTube chat.
Parker Hannafin?
Yeah.
I haven't looked at that one in a long time.
Either way.
Let's go look. PH. Ooh, it's gone just nowhere. No wonder I haven't looked at it in a long time. It doesn't go anywhere. I mean, I'm going back to a 3-year chart on this thing now, and there's really no trend at all. This thing is just range bound too. Gets down to the 157, 158, seems to find buyers. Gets up over 180, seems to find sellers. That's from the last 2 years. So I guess that, you keep playing it that way until it doesn't work anymore. But this is more like a channeling stocks.com play. Get down to that 156, 157. Maybe it finds buyers again. I think at 166, you're kind of in the middle, though. Makes it difficult to make a call.
Looks like the range is getting a little bit tighter, though, which you want to see. So, yeah, I guess.
I think you play the range until it doesn't work anymore on that one.
Let's do
what else you got?
One more. Let's do general.
You broke up. What was the symbol?
DG.
Oh, you still broke up. DG?
Dollar General.
Oh, Dollar General.
Yeah.
Wow, these dollar stores, eh?
They're amazing.
They're amazing. I mean, they keep coming. Dollar Tree too. I gotta go look at Dollar Tree. I mean, they're both, Dollar General's been an outperformer for sure over Dollar Tree. I don't know why it's become the better one of the two, but I just remember this. I remember some significant pullbacks here, and I'm thinking back to 2016 when the stock lost 20 points in one day. What a buying opportunity that was. It would have taken you about a year of just chopping around before eventually started to go and break out again. But you quietly got a double there if you were buying that pullback because it's up at 160 here now. I mean, it's holding up. It looks like it's consolidating to go higher, but I would say breakouts have been tough in this market. 162 is very resistive. We've had a lot of, we've been up there a couple times in the higher 160s and 1-61s and hasn't gone, but it's holding up well. Starts to break out, gets over 162, 163, maybe it could go again. Starts to lose 155, that's where I'd get concerned. So if I am long and I'd probably stick with it. Starts to cut out down through 155, I'd probably get out.
All right, that'll be it for our show. Before I go, I want to once again tell you about the Webull WeTrader competition. Per trade and win Tesla. That's the summary of that. Or $40,000 towards your student loan payments. Download the Webull app to learn more. Also, a portion of those proceeds will go to the Shriners Hospital for Children. So paper trade, show us how good you are, win a Tesla, and also donate to charity at the same time. Webull.com, Webull app for that. Thank you to our guest today, Kenny Polcari. Thanks to all of you in our chat. Please remember all the information from our show meant to be used as informational purposes only, not for investing or trading advice. Catch our podcast on wherever you get your podcasts. We're on YouTube, and email us if you have any questions at premarket@benzinga.com. Joel will be back with us tomorrow. In the meantime, everyone have a great day and good luck.